A Roth IRA is an important part of a retirement plan portfolio. In today's video, we're going to discuss what you need to know about Roth IRAs to boost your retirement and minimize taxes. Stay tuned. Before we get into Roth IRAs, be sure to hit the subscribe button. I want to make sure that you don't miss any of my videos on personal finance and investing. Now let's get into it. Unlike traditional IRAs, 401ks, and 403bs, Roth IRAs are tax-free when you make withdrawals in retirement. Now let's look at a comparison between Roth IRAs and traditional IRAs. I want to also mention that I've written extensively on the difference between tax-deferred and tax-free on my website. I'll be sure to leave a link to it in the description area of this video. But let's talk about the difference between Roth IRAs and traditional IRAs. With traditional IRAs, you make a contribution, and then when you go to do your taxes, you reduce the amount you contributed to the IRA from your taxable income. This is an example of tax deferral. So you're putting money into a traditional IRA, and each year you reduce your taxable amount by the amount that you've contributed to the traditional IRA. Over time, the balance grows, you have investment earnings, reinvested dividends, etc., and the account balance grows. You have return on investment. Well, years later down the road, when you retire and you begin making withdrawals in retirement, those amounts in your traditional IRA have never been taxed. So when you take money out, the IRS views that as income, all of it. So let's say you started your retirement account, your traditional IRA, in your early 30s, and you've been putting money in it for over 20 years, over 30 years. That account balance has grown significantly. So when you take money out, all of it will be considered taxable income. That's often a rude awakening for those who are in retirement and all of a sudden finding out that all those amounts that they have saved, now that they're using it, is all taxable. Now in contrast, let's look at Roth IRAs. Roth IRAs are funded with after-tax dollars. That means when you make a contribution, you don't get to deduct the amount that you contributed off of your taxes. All the money that goes into the Roth IRA is after tax. However, when you put the money in the Roth IRA and you invest it over time, you have investment earnings that reinvest on itself, your portfolio grows, and then when you're in retirement and you make withdrawals, all of those withdrawals are tax-free. No tax on the withdrawals that you make from a Roth IRA. That's an incredibly powerful thing to have in your retirement savings toolkit. The ability to withdraw money tax-free. Roth IRAs deserve a close look. There are contribution limits to Roth IRAs, just the same as there are contribution limits to traditional IRAs. The IRS sets these limits. In 2019, you can contribute up to $6,000 per year in a Roth IRA. If you're age 50 or older, you can contribute $7,000 per year. So it's important to note that there are income limitations for those wanting to contribute to Roth IRAs. You don't want to run afoul of these rules because you don't want to over-contribute to the Roth IRA and get penalized by the IRS. We're going to discuss that in more detail later. Unlike traditional IRAs, Roth IRAs have no required minimum distributions. Required minimum distributions, or RMDs, are what you have to take from traditional IRAs when you reach age 70 and a half. Roth IRAs aren't subject to RMD rules. What does that mean? It means that you can continue to have your money invested in a Roth IRA long after age 70 and a half if that is something that's beneficial for your situation. It's important to note that, as with most rules, there are exceptions when it comes to required minimum distributions and Roth IRAs. If you have a Roth IRA and it's your own and you are over age 70 and a half, you're not subject to RMDs, or required minimum distributions. And if you inherit a Roth IRA from your spouse, you are also exempt from the required minimum distribution rules. However, if you inherit a Roth IRA from anyone other than your spouse, you will be subject to Roth IRA required minimum distributions. I've written much more extensively about this on my website, and I'll be sure to leave a link in the description to this video. As mentioned earlier in the video, there are income limitations to being eligible to contribute to a Roth IRA in the first place. We're not going to dive into the exact dollar amounts because they vary depending on whether you're married filing jointly or single or have another tax filing status. I will be sure to leave a link to my website that goes into much more detail about these income limitations. But what you want to make sure you understand is that you may be ineligible to contribute to a Roth IRA, or at least phased out of being able to make a full $6,000 or $7,000 contribution to the Roth IRA. So what you want to make sure you do is check those amounts, make sure that you're eligible. Now, the main takeaway of this is to contribute to a Roth IRA while you can. A lot of people come to find out that a Roth IRA could be a powerful tool for them as a retirement savings tool, but they put it off. And for whatever reason, they delay making Roth IRA contributions. Well, fast forward 5 years and you finally get to that point where you feel like, okay, I want to make Roth IRA contributions. You may find out that you're no longer eligible because your income has risen over the past 5 years and you're now in the Roth IRA phase-out range where your contributions could be limited or excluded entirely. So make sure to keep up with the income limits applicable to Roth IRAs. Roth IRAs are an important part of a serious retirement savers toolkit. Not only do you get the benefit of boosting your retirement, but you also get the added benefit of tax savings when you retire. Don't neglect the powerful benefits of a Roth IRA. You won't regret it. If you found this video helpful, be sure to hit the like button, and most importantly, please be sure to subscribe. I want to make sure that you don't miss any of my videos on personal finance and investing. Thanks for watching.